Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at SoundHound AI.
If you find our talks useful, please consider subscribe, like, and comment underneath the video.
And a quick note before we get into today's stock. If you need emergency cash and want to look at a short-term installment loan option, you can check out MaxLend Loans through my link below. Eligible customers may qualify for loan options up to $3,750, and funding may be available quickly if approved. But please be careful, always read the full loan agreement, APR fees, repayment schedule, and total cost before signing anything.
All right, let's jump right into the hook here. You know that feeling when you're sitting in your car yelling, "I want one burger, no pickles," into a plastic speaker box, and somehow, the screen still shows you ordered 3 large fries, a diet soda, and a side of existential dread.
Oh yeah, we've all been there. It's the ultimate modern frustration.
Right. You essentially become a robot just to talk to the robot. You're over-enunciating every single syllable while the line of cars behind you just gets longer and longer.
Yeah, and for you as a consumer, it's annoying.
Mm-hmm.
But for a business, it's a catastrophic multi-billion-dollar leak in their operations.
I can imagine.
Enterprises, they desperately want the margin-boosting efficiency of automated customer service. But they are terrified of alienating their customers with clunky, latency-filled interactions. They really need the technology to feel invisible.
All right, let's move into the wealth building context, because if you look at the current artificial intelligence narrative, that clunky speaker box is supposedly a relic of the past.
Right, exactly. And that's exactly what SoundHound AI is promising to kill.
So we're looking past the generalized hype surrounding the broader AI market today to figure out something very specific for you. We want to know if SoundHound's recent hypergrowth actually justifies its premium stock valuation, or if it is just, another cash-burning mirage destined to get crushed by massive tech monopolies.
Right, because the baseline for this entire evaluation starts with a rather staggering data point from their 2025 financial wrap-up.
Now let's look at the fundamentals. Walk me through that data point.
So SoundHound delivered record revenue of $168.9 million.
Wow.
Yeah, that represents a 99% year-over-year increase.
Yeah.
They effectively doubled their business operations in 12 months.
Doubled it. That's massive. But sitting right alongside that hypergrowth is the core tension of our analysis, right? The company is still entirely unprofitable.
Exactly. And a 99% growth rate tells us that Fortune 500 enterprises are aggressively buying what SoundHound is selling.
But that creates an immediate mechanical question for me. Why buy SoundHound? Think about the ubiquity of large language models right now. We all have access to generic AI.
Sure, ChatGPT and the like.
Yeah. So if I deploy a pure LLM in a commercial setting, it's basically like hiring a brilliant encyclopedic intern who unfortunately hallucinates and sometimes lies with, terrifying confidence.
That's a great way to put it.
Because if a generic AI invents a fake policy during a chat, it's a minor headache. But if it invents a menu item or, hallucinates instructions while someone is operating a vehicle, that's a total liability nightmare.
Exactly. And the mechanism they use to solve that hallucination problem is a proprietary architecture they call hybrid AI, which is driven by their speech-to-meaning technology.
Speech-to-meaning?
Yeah. It's a very robust technological moat that fundamentally alters how the computer processes human intent. Standard voice AI usually operates through a sequential multi-step pipeline.
Like it does things one at a time.
Right. First, you have automatic speak recognition, or ASR, which captures your audio and transcribes it into text. Second, that text gets handed off to a natural language understanding engine, or NLU, which reads the text and tries to figure out what you actually want.
And then finally, it generates a response and turns it back into audio.
Exactly.
So it's basically a game of digital telephone. Each step introduces a fraction of a second of delay, which is why we always get that agonizing, awkward pause where the bot is, thinking before it answers.
Yeah, the latency.
And in a high-volume drive-thru, latency destroys your throughput. Every second wasted is fewer cars processed per hour.
Plus, relying purely on massive large language models introduces exploding inference costs. Computing power is incredibly expensive.
Definitely.
So SoundHound circumvents this entire sequential pipeline by fusing the ASR and NLU components together. It processes the meaning of your words in real time, parsing your intent syllable by syllable as you speak, rather than waiting for you to finish a sentence to begin translating it.
Oh, wow. So the latency drops to basically 0. But that still leaves the confident intern hallucination risk we talked about. An instantaneous response is completely useless if the AI tells the customer they can pay with monopoly money.
Right, and they mitigate that risk through something called an agentic plus framework.
Okay, what does that mean?
It essentially splits the AI's processing brain into two distinct hemispheres. For highly sensitive security-focused or rigid operational steps, it relies on deterministic workflows. For open-ended conversational queries, it taps into generative AI.
Okay, let me make sure I'm visualizing this correctly. In our drive-through scenario, the deterministic side acts as the rigid, unyielding cash register.
Yeah, exactly.
It handles putting the burger in the cart, removing the pickles, and processing the credit card.
It follows strict, coded rules that cannot deviate, so it physically cannot hallucinate a free meal. The generative side acts as the charismatic cashier.
That is the perfect analogy. If you suddenly interrupt the rigid ordering process to ask, wait, does the barbecue sauce have gluten in it? The rigid cash register doesn't crash.
Right.
The generative cashier seamlessly takes over, accesses the nutritional database, answers you in a natural conversational tone, and then hands control back to the deterministic side to finalize the transaction.
That's incredibly smooth.
It is, and that specific capability managing complex multi-intent requests without breaking character or compromising the transaction earned them the title of leader in the 2025 IDC MarketScape for worldwide conversational AI platforms.
Having award-winning technology in a sterile laboratory environment is fascinating, but history is full of superior tech platforms that lost out to better distribution. We need to look at whether this engine is actually surviving contact with the real world at scale. Oh, it definitely is. The evidence for their real-world durability is anchored in their recent massive deployment with Casey's General Stores.
Okay, how massive are we talking?
SoundHound rolled their technology out across 2,600 locations.
2,600, wow.
Yeah, that scale completely graduates the technology out of the pilot program phase and into a critical operational dependency for a major brand. Across that specific deployment, the AI has successfully handled over 21 million guest interactions.
21 million interactions means the system has encountered every conceivable edge case. I mean, it has successfully parsed regional accents, people coughing mid-sentence, background noise, and customers changing their minds 3 times in 10 seconds.
Absolutely.
If you are an executive at another Fortune 500 company watching that Casey's deployment, that 21 million milestone is the ultimate de-risking event. It gives you the confidence to actually sign a contract.
It does. And it also gives SoundHound a foundation to aggressively buy market share rather than just waiting for organic growth. This strategy was put on full display with their recent $43 million equity acquisition of LivePerson.
Wait, LivePerson. That's fundamentally an enterprise messaging platform, right? They facilitate text-based customer service chats.
Right, exactly.
Wait, I need to challenge the logic on that acquisition. SoundHound's entire moat, the speech-to-meaning tech we just unpacked, is inherently acoustic. It's based on analyzing syllables and vocal intent. LivePerson is a text messaging company. How does buying a repository of typed customer complaints improve a voice-first artificial intelligence engine?
It really comes down to mapping human intent across different vectors. By absorbing LivePerson, SoundHound integrates roughly 1 billion customer messages a month into their ecosystem.
1 billion a month.
Yeah. Even though it is text, it provides an unprecedented ocean of training data regarding how consumers interact with enterprise brands. It trains the natural language understanding hemisphere of their AI on the infinite variations of how people ask for refunds, upgrade subscriptions, or report lost items.
Oh, I see.
And more importantly, it provides an immediate, warm distribution channel. SoundHound now has access to a massive pool of enterprise clients who already trust LivePerson's text software.
Which is huge because the sales cycle for enterprise software is notoriously long. Trying to cold call a major bank to sell them voice AI could take 18 months. But upselling your voice AI to a bank that already uses your newly acquired text platform is a much easier conversation.
Management clearly recognizes that dynamic.
Yeah.
There is a very credible, though speculative, rumor circulating suggesting a $500 million revenue opportunity strictly from cross-selling voice AI into this newly combined LivePerson customer pool.
$500 million in potential synergy completely changes the financial trajectory of the company.
It really does.
But, pulling off that kind of aggressive expansion highlights a very uncomfortable reality for any AI startup. Scaling AI compute isn't just a one-time software build, it's an active utility. Every single time a customer speaks, servers have to process it.
Oh, the cash burn can be intense.
Right. It's like trying to run an airline where the fuel costs double every time you add a new passenger. With all of this expansion, how close is SoundHound to running out of oxygen?
Well, the balance sheet actually reveals a surprisingly robust financial runway, insulating them from that exact risk.
Yeah.
They closed out 2025 with $248 million in cash reserves.
That's a solid cushion.
It is, and crucially, they achieved this while maintaining zero debt.
Zero debt in the artificial intelligence sector is almost an anomaly. Most growth companies in this space are leveraged to the hilt, taking on massive loans just to secure allocations of NVIDIA chips or build out data centers.
Exactly.
Operating with zero debt gives them incredible strategic leverage. They aren't bleeding cash to service high interest rate loans, and they aren't forced into panic selling equity, diluting their current shareholders just to make payroll.
Yeah, the lack of debt allows them to absorb their current unprofitability without facing an existential crisis. If we look at their bottom line, they reported a GAAP net loss of $14 million for 2025.
Oh.
But when assessing operational efficiency, we need to strip out the one-time, non-cash expenses like stock-based compensation. When we do that, their non-GAAP net loss narrows to $53.9 million.
That's a significant improvement from the $69.1 million non-GAAP loss they posted in 2024. The fundamental mechanism here is operational leverage. They doubled their top-line revenue to $168 million, but their losses actually shrank.
Precisely.
That proves their core business model is scaling efficiently. Their computing and operational costs are not rising at the same exponential rate as their revenue.
And analysts are projecting that leverage to compound rapidly. The consensus estimate for 2026 shows a much improved 5-cent loss per share, putting them right on the precipice of true profitability.
That brings us to the catalyst timeline. What are the major events investors need to be watching for?
Well, management's forward guidance mirrors that optimism we just talked about. They're projecting $225 million to $260 million in revenue for 2026 and aiming for an ambitious $350 million to $400 million by 2027.
But what are the immediate milestones to hit those numbers?
The most immediate pressure point is their Q1 earnings report, scheduled for May 7, 2026. The Street has modeled expectations of $42.59 million in quarterly revenue alongside a 5-cent EPS loss.
Okay, so that's a key date to watch. Any other catalysts?
Yes, the secondary, longer-term catalyst is the H2 2026 closing and integration of the LivePerson acquisition. The market will be watching very closely to see if they can execute that seamlessly.
All right, now let's pivot to the chart. What is the technical setup looking like for SoundHound right now?
The underlying technical setup on the charts explains a lot of the recent psychological battle. SoundHound is navigating what technical analysts call a volatile bottoming structure.
Volatile is right.
The stock took a severe beating during previous market rotations, but the recent price action indicates a sharp shift in momentum. I mean, we saw the stock surge roughly 17% in a single day on May 1st alone.
A 17% daily move is incredibly violent, but, daily price action is mostly noise. What do the moving averages tell us about the actual trend?
It is currently trading comfortably above its 20-day and 100-day moving averages. This signals that short to medium-term buyers are fully in control and accumulating shares. However, it remains 18.5% below its 200-day moving average.
Right. And mechanically, being trapped under a 200-day moving average creates a ceiling of overhead supply. You have an army of investors who bought the stock at its all-time highs who have been suffering through massive losses.
Exactly, bag holders.
Yeah, and the moment the stock rallies back toward their original purchase price, they sell just to break even. Every time the stock tries to break out, it gets hit by a wave of relief selling.
That overhead resistance is formidable, and the momentum indicators suggest the current rally might need a breather before tackling it. The Relative Strength Index, or RSI, is currently sitting at 69.34.
And for context, an RSI approaching 70 means the asset is nearing overbought territory. The buying velocity has been so intense that a short-term pullback or consolidation period is the most probable outcome.
Yeah, it's like a runner sprinting too fast off the starting block. Eventually, they have to stop and catch their breath before finishing the marathon.
But even with those hurdles, where do institutional targets sit?
Despite the near-term technical hurdles, major analytical firms, including D.A. Davidson, H.C.A. Wainwright, and Wedbush, are maintaining buy or outperform ratings. Their price targets range broadly from $12 to $20.
And given that the stock has been trading in a 52-week range of roughly 5.83 to 22.1 Simmon, those targets imply massive upside potential. So what does market sentiment look like?
Well, this is where it gets really interesting, because you are staring at a massive contradiction in market sentiment.
How so?
On one hand, Vanguard just bought a massive 5.21% stake, that's 20.35 million shares, But on the other hand, high-profile commentators like Jim Cramer are on national television explicitly warning retail investors, stating, quote, "We cannot be in SoundHound."
Wow, so Vanguard is buying over 20 million shares, and the talking heads are telling you to run away. That is a massive tug of war. Now let's talk about the risks. Because no stock trades 66% below its all-time highs without some serious skeletons in the closet.
Right.
We've outlined the bullish tech moat and the bulletproof balance sheet, but we need to examine the trapdoors. If a conservative giant like Vanguard is buying, what is the core bear case that keeps other investors awake at night?
The bear case is rooted in the dangerous intersection of a premium valuation and decelerating momentum.
Hmm.
Currently, SoundHound trades at a staggering 23 times trailing sales.
23 times. So investors are paying $23 for every single dollar of revenue the company generated last year.
Exactly. A 23x multiple is priced for absolute perfection.
Yeah, if a standard software as a service company trades at 8x or 10x sales, SoundHound's current multiple assumes their hypergrowth will continue flawlessly for years. If the growth slows down even slightly, Wall Street will aggressively re-rate that multiple downward, crushing the share price in the process.
And that deceleration is already appearing in the data, unfortunately. While their Q4 2025 growth was an impressive 59%, it represents a sharp drop from the 68% growth they posted in Q3, and an enormous drop from the massive 101% growth they logged back in Q4 of 2024.
The law of large numbers is catching up to them. Doubling your revenue is much easier when you are a $50 million company than when you are a $168 million company.
Exactly. If that top-line growth rate slows down faster than their profit margins improve, the market will punish them relentlessly.
Which places massive weight on that May 7 earnings report we talked about. A miss on either revenue or EPS at a 23x valuation multiple will trigger an immediate sell-off.
And we also have the integration risks from LivePerson.
Oh, right. Merging corporate cultures and disparate technology stacks is notoriously difficult. If SoundHound's engineering team gets bogged down trying to seamlessly integrate a billion text messages into their voice architecture, it will drain their cash reserves, distract management from their core pipeline, and stall their enterprise rollout. The execution really has to be flawless.
It does.
So with everything on the table, what's the final verdict?
Synthesizing the entire fundamental, technical, and market landscape, SoundHound AI shapes up as a 7 out of 10 bullish prospect.
Okay, a 7 out of 10.
Yes, but it requires a specific investment timeline. This is fundamentally structured as a multi-year hold designed to capture the structural shift in enterprise automation, rather than a quick swing trade.
That makes sense given the volatility.
The execution risks surrounding the LivePerson integration and the premium valuation multiple are genuine hazards. Yet, you are looking at the premier pure-play lever on the conversational AI revolution. They have zero debt, a $248 million war chest, and verified real-world adoption at an immense scale. If management successfully executes on their timeline and hits that $350 million revenue target in 2027, the current price levels will be viewed as a historical discount.
They are essentially walking a tightrope with that valuation, but the cash pile and zero debt structure provide a very thick safety net beneath them. Now, while the financials are stabilizing and the technology is undeniably impressive, the prospect of SoundHound succeeding on a global scale introduces a completely different kind of question for you to consider. If this technology scales perfectly across thousands of brands, if SoundHound powers the drive-thru, the bank's customer service line, and the airline's ticketing system so flawlessly that the AI feels entirely human, it forces us to rethink the concept of brand loyalty.
Oh, that's an interesting point.
Right. If you can no longer distinguish between a local human employee who genuinely cares about your day and a centralized artificial intelligence agent perfectly programmed to simulate empathy who really owns your relationship as a customer, when the friendly, helpful voice anticipating your order at 5 different restaurants is actually the exact same universal algorithm, do you still love the restaurant or do you just love the software? It's something to ponder the next time you pull up to a drive-thru and the voice on the speaker box sounds just a little too perfect.
Absolutely. Need emergency cash. MaxLend Loans offers short-term installment loan options up to $3,750 for eligible customers. Apply through the link below and carefully review the APR, fees, repayment terms, and total cost before accepting any offer.
And if this episode helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode.